Good morning. My name is André Roux from the Institute for Futures Research, University of Stellenbosch. Imagine a personal situation. You're highly indebted. Up to a year's worth of your salary is made up of accumulated debt. Imagine you've maxed your credit card. Imagine your bank manager is no longer willing to give you a further overdraft, and yet you have lots of expenses to be covered. That's more or less the situation the American government found itself in until a few hours ago. But fortunately, and it took a lot of negotiation, by hook or by crook, America did manage to lift their debt ceiling. That means the government may borrow a bit more money to meet their very important expenses. This has come at a cost. One of the costs is that America, or the American government, has to commit itself to reducing their government spending, at the same time with no more than allowed to raise their tax income, which means, if anything, they've postponed what could have been the most disastrous financial situation since 2008. But at the same time, they're not out of the woods yet. It means that in the months and years and even decades that lie ahead, American government spending on important things such as education and health will have to be curbed, whilst, as I've already said, tax revenue won't really be rising. That means that debt levels are going to carry on growing. Now, as I said, this could have been one of the biggest calamities in living memory. But the world is still not all that happy. In fact, if anything, this whole situation has highlighted some very real and important global concerns, especially in the developed world. It's highlighted what happens when governments do become highly indebted. We think of Greece, we think of Italy, we think of Portugal, to mention a few. They're all going to face the same kind of problem and challenge in the months and years that lie ahead. In short, they will have to introduce austerity measures. And this is certainly going to keep world economic growth at a lower level than we had experienced until a few years ago. Perhaps not so much, interestingly, in places like China and India, where their government debt is not all that worrying. But this is also telling us something else. And that is, again, in the years that lie ahead, going to be a gradual shift in economic balance, away from the developed world, more towards the developing world. Coming back to the short term, we already see signs that the world has sat up and taken notice of America's concerns. There must be a possibility that interest rates in America will start rising, reflecting the growing concern about the high debt levels. There's even a possibility that China, which for so many years has helped finance America's government debt, might start pulling out. And of course, as we all know, the American economy remains the biggest in the world. If their economy slows down, as it may well do, then that does have a ripple effect throughout the entire world, not least of which Africa, and certainly that includes South Africa. In short, we seem to be seeing that this debt crisis, along with a few other realities such as rising food prices, rising oil prices, energy prices, a reluctance for employers to employ more people, is suggesting that the world economy at the moment is not in such a healthy place as perhaps a year ago. We are still battling globally to recover from the worldwide recession, and we've lost a bit of momentum. At best, the world's taking a bit of a breather in terms of economic growth. Sadly, unfortunately, we might feel the same here in South Africa. We also see signs of a bit of a, not a slowdown, but a stalling of the growth momentum. It highlights the fact that for Africa, and indeed South Africa, it's important that we start establishing more and more relationships, trade and otherwise, not so much with America anymore, or Europe for that matter, but Asia, China and India.